And we're back. It just hit $100,000. Now, I wanted to get on to a live, but I'm not going to make it. Here's $100,000. Look at that, just at the top of the screen. Today's video, well, we've done it. We've hit 100K. Big smiles on the face. This is 550% for Bitcoin from the low that we looked at the beginning of the year. So, well, end of 2022, early 2023. Here's 100K, 555%. So whether we are able to hold this level today is another question. Whether it closes above 100K is going to be seen at the end of the day. So that's going to be a really important point. Now, before I get too carried away with the price and the analysis as it currently stands, make sure you hit that like button, subscribe to the channel. If you are new here, each of the day's analysis builds upon the previous day. It's your home of macro cycle analysis. I've got a big one for you guys today, looking at the macro cycle and how the bubble essentially hasn't even necessarily begun, like the really, really hype stage. And that goes across all of the markets. We're looking at Bitcoin. I've also got some crypto stuff for you as well. Here's some XRP. I've got ETH doing really good things right now. And there was a call for ADA and a few other things as well. So let's kick it off with the usual stuff. Links in the video description for channel sponsors. Bluffin, that's a no KYC exchange if you're looking to trade cryptocurrencies. I'll talk about that more later. And of course, Bybit also has a debit card now. All right, guys, I'm going to start it out with the S&P 500. This was yesterday's video right here, looking at how this could pop off. So you can see this in the background, 2 minutes. And I was talking about this basically potentially popping off and coming back down. Yesterday, we saw it pop off 0.4%. We haven't seen it come back down yet, or if it does at all. Beautiful alerts there, 100K. I'm going to leave that up for a bit. But the idea here with the S&P 500 is that overall, I think we're going to see further upside. But this was part of that pattern that I was talking about yesterday, where you get this slow grind up, lowering volume. You can get the pop off to the upside because a lot of people are expecting this sort of collapse. But we just have to wait and see whether the market continues to push higher. This has still got further to go. There's a lack of volume here pushing that market up just for these price areas. So that's why I'm still concerned with whether this is going to be a sustained move to the upside or we're going to see a correction. But that's short term. Longer term, I still see much, much further upside for all of the markets. I just think it's important to have a look at the short term as well, because this is the stuff day to day, week to week that people freak out about, especially when you get things like the August low that came in for Bitcoin and cryptos. And that was obviously the Japanese yen carry trade. Just a few weeks of down, top to the bottom. It was only 14-day trading days, 20 days, calendar days. So it's 3 weeks that you had to live through that. Recession calls, everything. The 18-year cycle is wrong. All these sorts of things, it's wrong, and the market is going down. The cycle's over. I saw the comments from people talking about it when it came to Bitcoin and crypto. It's like, understandably, I guess, especially if it's your first cycle or if it's your first time trading the markets. But I think that something like this is getting set to happen again. So although we're sort of ecstatic about $100,222 for BTC, January-ish time, as we looked at with yesterday's video and the video before that, where we were looking at the December analysis, there is some timing to suggest that that we've got some corrections to come, probably whether it's later this month, whether this is able to hold, or it's coming in Q1. So that's just a short-term thing. I just think it's something important to prepare for, because you typically see the same sort of fear spreading back into the market at that time, only to keep you out of the market, and then you see the markets move up again. It's what we've been talking about for years with each of these lows that have come in, and all the receipts are on the channel, and I explain why we're looking at it, why we think it's still going to go up from that point, and why it's not time yet for a significant collapse. And obviously that's part of the 18.6-year cycle. We're not ready yet for the big recession that is coming. Here is the pop-off for the all-time high. Also on the SPX, the NASDAQ hit a new all-time high yesterday. The Dow Jones just missed out on a new all-time high. And the VIX, although was up a little, it's still trading in the bull market zone. So this is my bull market zone at the bottom here, between 11 and 17 in the back. I've got the party lights on in the background just for the old Bitcoin 100K party. The home builders ETF struggling the last few days, but when you zoom out, it's still at elevated prices here, way up in the top. And if you remember, one of the maybe early warning signs we're looking at here, you never know for sure, but you can see the downtrend before the big crash, before the massive recession, the global financial crisis of 2007-8. So this could be a canary in the coal mine that could let us know things aren't as rosy as the media is telling us at that time. Right now, things are, kind of balanced. There's a little bit more bullishness than bearishness, but it's really not everyone is swept up in the extreme emotions of an insane bubble that I've been, talking about now for a couple of years, while the markets have been going up throughout that time. This one is rather interesting. Most indices are wildly above their exponential trends. So essentially overbought. The markets are way too overbought. Major indices are far above trend, except for one, but it's still above trend. Now, the interesting thing to note here, this is 100 years of data, 1920, 1930. Here we are at 2020. Just have a look at the current value line. The market can go much further, and that's what this article is discussing here in terms of the long-term trend, the trend deviation equal to current value. We got there at the bubble for the .com bubble, and also the depression bubble in the 1920s, the big move in the 1920s. That went ballistic to the upside. So although things are overbought and there is obviously a lot of interest and excitement around the markets, do know that things can go a lot further, just like the quote that we've often referenced back to, that markets can remain irrational longer than we can remain solvent. Essentially, they can go up for a lot longer than what people think. Often it gets to all-time highs and everyone thinks it has to come crashing down. Outside of the internet bubble, the NASDAQ has rarely been more above trend. So here it is, it's moving above trend as well. But as we look at the deviation from the long-term trend, it can go further, and it did do that recently in 2021. It went a lot further than that, a little more than where it is now, but also in the .com bubble, it went a lot further. And so if AI is part of this narrative that is really building up the scene, whether it's in crypto, whether it's in the stock market, maybe we could get something even halfway to what it did in the .com bubble. You've got the Dow as the most above trend since 1929. It's pretty up there. There's the Dow as well. So essentially, this is just showing you that everything is basically above, except for the Russell 2000, which is also catching up to its long-term trend line. So it doesn't necessarily do the same sort of deviations as the other stock markets. You can see here they're at like 150, and NASDAQ, that screamed away to 300%. And then the S&P 500 was also around 300% in the 1920s. Whereas the Russell 2000, the smallest 2000 stocks in the US, rarely gets above sort of 20% away from that deviation. So essentially, that's a pretty interesting point about that bubble that is coming around and continuing to build. And we're seeing it across other stocks like Nvidia, which has been cooling off for a little bit. This is the fractal that I was using from the previous move, overlaid right here. It was trending pretty well along the same sort of movements, except for this pullback in September and then the big push up, but it has basically slowed down, which isn't necessarily a bad thing at this time, especially as the markets are still heading up. It's basically catching up with some time after such a significant move from, $38 all the way to 140. And of course, there were stock splits involved as well. Tesla also on the move here, but just catching up with time, which is what we've seen Bitcoin also currently do. Now, pushing away to around 101.5. The other couple of stocks I just want to have a look at were MicroStrategy. People are interested in this as well. So this might be on the move. You've got a day of 8% up on the 50% levels. So watch out for any sort of moves up that can hopefully, if you're bullish and long spot only, you want to see it break tops and close higher, putting in higher lows. That is an absolute must. What MicroStrategy has done before, especially when Bitcoin goes on that second run, see this is the 2021 bull market, it peaked out early and then put in a lower high at Bitcoin's all-time high at 65K. So it was a big lower high. And then when Bitcoin's final all-time high came in November, it was again a lower high from that February peak. So that's all I'm concerned with at the moment for MicroStrategy. I'm not saying it's going to collapse tomorrow, but if it did something like it did last cycle, doesn't mean it's not going to go up from $400. It could keep going up, but just watch if there is a lower top, that is a weakening stock. If it goes above it, great. Just watch for at least a little bit of a pause and then continue on to develop that strength there. So that takes us across to the S&P and Bitcoin. Here is the bull market chart that I gave you guys years ago, looking at how Bitcoin follows along with the S&P and that sort of liquidity coming into the markets. You've got the accumulation zone well and truly finished now for BTC, and we're into this Bitcoin bull market zone, which is basically where the S&P 500 continues to climb month after month after month in a relatively unscathed movement. You don't really see too many corrections or breaks of the swing bottom. Taking a look at the Gans swing indicator, you've got the up movements throughout the bull markets were basically unbroken. So we're on a similar trajectory at the moment. You can see there was a slight correction, another slight correction, and then once those monthly swings were broken, the bull markets were over for both. The bull market was already over for Bitcoin by November, and the S&P 500 barely hung out that same price for a couple of months and then started to come crashing down and go back to 2013. It was straight up into 2014, and Bitcoin topped in November of 2013 with one small correction there. This is for the S&P, and essentially we're in that same sort of trend now. So I would expect to see some sort of corrections for the monthly swing here, but it seems like it could be a pretty reasonably clear run. Obviously, keep following the chart in case some of the data changes there. So looking at the longer term view here for Bitcoin, the big bubble, we've looked at all the bubble news for the stock markets hitting new all-time highs. Bitcoin obviously has broken to a new fresh high today, 101,450 so far. This is the interesting one about the timing. So if we are on a similar trajectory to the previous cycles, we're at month 25 now. So we can move that across to 25. This is a chart I shared with you guys for months now, but essentially updating it last month where we begun the move into that new all-time high. Just around the election time, we started to break out into those fresh prices there, 74K. Now, the previous cycles were pretty similar. You've got here 23 months, and you can see the breakout testing the old all-time high. And so what I think's happened this cycle is the market's done just enough to fool the majority of the people most of the time. That's another saying through the market. So you can see it ran up into March, put in a new all-time high a month before the halving, and then everyone thought, well, that was it. We're getting a left translated cycle. The game's over, and it's time to come back in 3 years' time, 4 years' time, or whatever, because it did a new all-time high. It had never done that before. But when you look at the trends, it's still putting in higher lows on the monthly scale here. It is speeding up, which is a little bit of a concern. It might need some time to chill out eventually, which is why we're looking at Q1 to have that longer time, unless we start to see things change this month as time sort of catching up. We're into the fourth month from the low in August. 1, 2, 3, we're into that fourth month now. So yeah, in terms of timing, we are roughly around this period here. There's 25 months from that low, and that was that January 2021 pullback. So we had that first pullback. There was about a 30% correction in January of 2021. Yes, the market kept going in February, March, and April, but there wasn't too much left there, except for altcoins. So altcoins were still having a party through that time, and Bitcoin was essentially more or less slowing down. 32 to 64. It's still a 100% return. It's still fantastic, but I know everyone's out there looking for hundreds and hundreds of a percent. Because right now, Bitcoin has done its 556% move. Basically, 6.5x from that low. Pretty decent move there. Now, the previous cycle to that, so the 2017, which I think is what we're tracking the most. It's not one or the other. It's just some of the similarities. Month 23 started to break. And then month 25, you also had that the next big move up, the highest close just under the previous old all-time high. Month 26 reversed, 27, and then 28 really got going. So in terms of patterns, you had a lot of moves to the upside and then corrections to check the price. Like you're just checking who the buyers are and who the sellers are, up and back, up and back. And then you started to get less checks. And so if you're getting less checks in a market, it's allowing it to run away quicker. And it's kind of like if you're not checking the aeroplane, we talk about rockets going to the moon. If you're not checking the safety of an aeroplane, I'm coming up with the analogy on the spot here, eventually it's going to crash. So you're not getting the good checks and balances in the market, and then eventually it comes crashing down to check where the price found some support last time. And the same thing happens every single time. You get the moves up, they're all checking each other at the bottom. They forgot to check, they get too excited, time to take off, we're leaving now, just go. And then it comes crashing back down. There was nearly no check through that period of 4,000 through to 6,000, but you got the COVID crash, it checked it all, and then that was basically time to run. On the way up, no checks, and eventually you had to come crashing down into that bear market. So it can take some time until it gets checked out. Doesn't mean that you always have to come back and check the previous tops, to come back and retest those levels and then keep going, because we know Bitcoin does like to move pretty quickly. So this chart here is looking at how many months to go in the bull market. We're at month, as I said, 25. The cycles have lasted roughly 35 months. Previous one was 35, previous one to that was 35, the one prior to that was 37. So if we start with 35, do note that we can extend this out to 36, maybe 37, maybe even 39, which would take us out to early 2026, okay? If we just start with the first one at 35, well then we have roughly 10 months to go. We're into that 10th month and we have about 10 months to go. I think it's always important to prepare for, let's call it the worst, and then hope for the best. The worst could be that we have less than 10 months to go, but just looking at previous cycles, that's what we're going to work with. Our other indicators to let us know if things are ending a little earlier is, of course, our swing indicator. If you start to see some of the monthlies get broken after this point now, that could be one of the first early warning signs that the trends are changing and you're not going to see much higher prices. You might see a bounce, but you might not see big higher prices. So over to the short term, yet again, we're at a top there of 101,600 now as I continue to film. If Bitcoin's able to close above the previous tops, and at very worst, the swing tops here, calling a round number of $98,000. You can see that's where these tops come in, the closes were there, and then some of the swing tops were slightly higher. If today's, this next 24 hours is pretty critical. If this comes back under, that's where you could say that today's bar was essentially the potential start of a fake out to the upside, basically getting us to that 100K level and then faking out to come back underneath. So right now, the next 24 hours is super critical just for the short term here for BTC. If there are closes under 98K and at the very earliest price point, 98,860, because that was that previous top, that would be a cause for concern over the short term. Longer term, however, I still see much further upside here because essentially the trends are up, the timing is there, the macro cycles are still up, everything to do with the stock markets are still grinding higher, as we also looked at with our other stock markets here, and of course with the tech sector and AI, that is also growing as well as we look through all of these exponential trends. So that takes us over to altcoins now. So this is the total cryptocurrency market cap, the true altcoin market cap with stablecoins excluded. You can grab this with the TIA indicator suite. Now, along with trading hundreds of different altcoins on Bybit, you can also get a debit card. Yes, you can go and pay for things with your cryptocurrency. It's all done through the app. You'll get your physical cards and you can go and splurge with all of those crypto gains that you may have made on, who knows, XRP, maybe even on DOGE. Now, the thing that I often talk about is having multiple exchange accounts set up in case you want to trade different altcoins that aren't on some of the exchanges. That is an issue. People are wondering, where do you find certain coins? It is across multiple different exchanges. Some will have them and some won't. So I've also got Bluffin down there and also CoinCatch. And for the Aussies, you've also got SwiftX there. This sale is potentially over at 5 p.m. today. So you got $30 of free Bitcoin. That was the Black Friday giveaway. But there will be something coming up for Christmas time as well if you skip out on that. Now we're looking at the all-time high here for the true altcoin market cap coming up at $1 trillion. Not there yet. And would you know it? Just on the verge of hitting it, and we've had a couple of days pullback. So pretty much a test up at those levels while Bitcoin now goes on that run past $100,000. In terms of the timing, nothing else has changed here. We're getting very close to that next tipping point at $1 trillion. Watch out for any sort of rejections or resistance levels at around 1 to 1.05, which is right above there. That's your 150% of the extension move. So 150% is often an area where the market likes to come up, test, and then pause. So if that happens, don't freak out. I think at least from what the timing, the cycles are talking about, there could be a bit of a pause coming up, and then that's time to get back into some other positions, continue to accumulate whatever it is that you are looking to get into. The ETH BTC chart is also tracking along relatively nicely, still needs to confirm a close above 0.04, so 4% of Bitcoin's value. And of course, we're seeing a little bit of a down move right now as Bitcoin is, of course, pushing past 101,000. Damn, look at that price there for the Aussies, $157,400. As for ETH USD, $3,855. And for the Aussies, you have hit $6,000. So $6,000 per ETH. Now, this is fantastic news, at least in the short term, as yesterday's bar, 6% up, closed above the 50% level. You can see that right on top. It got rejected dead on that 50%, and then we got to close above the 50% and the downtrend, so the diagonal downtrend from the all-time high to the current bull market cycle top at around whatever it was, $4,090. So that's a good start for some more strength, some good volume coming in. I don't expect it to shoot straight up to new all-time highs tomorrow, but everything is still building towards some good strength for Ethereum and that whole Ethereum narrative that continues to build, whether it's going to be memes, whether it's going to be AI on ETH, whether it's going to be, who knows, NFTs again or some other jargon. Maybe it's the Dino coins that are on ETH as well. But you can definitely see that the momentum here has continued to build with the volume at the bottom and more breaks of key price levels. The next price level to break and confirm above 4,000 and then the 4,100 before we get to that new all-time high, with the next target being $5,300. That's the 100%. The 150% is up here closer towards $7,000. So I think these two are on the cards for this cycle, but again, their price projections, just keep following the chart because we know what happens with price projections. If they don't make it, you're left holding the bags. Just keep following the charts. It's going to keep you the safest way for actually collecting those profits as opposed to waiting for particular price points. This was a chart that showed us things were about to explode. It's your USDT dominance. The level to watch, 3.8%. That was the previous Bitcoin all-time high in March of this year in 2024. It was also a low back in April of 22. And that was the point where Bitcoin topped out again at its monthly lower swing top before it crashed down to 15K. So this level has been very important for the USDT dominance. And as it sits, if it was to close where it is right now, this is a close below those lows and a close just below 3.8. I think it needs further to go, another few percentage points here. So, like 3.7 would be ideal. And that could then trigger even more funds flowing out into Bitcoin and altcoins. This is the time, I think, where we want to be trading alts. You do what you want to do, of course. But on the left-hand side here, ETH, 3,900. We've got alerts going off as I'm filming as well. When I want to stay out of alts, when I want to trade alts. So there are going to be significant corrections within the trading of alts. That's just part of the game. They can be 30%, they could be 80% or even more. You can see this correction here back in 2021 was 60% correction. Now I've just got Mana up here as an example. these are the easiest times where you got some big moves to the upside. Generally, you get a couple of significant pumps. I can't confirm, to be honest, whether it is going to be like one of those pumps and then another significant pump. But in terms of timing, we're definitely out of this zone here, that whole accumulation thing. And we're somewhere in this one or potentially at the beginning of the next bigger one, which could then pull back into another swing to the upside. So it's unconfirmed yet, but what I'm confirming to myself at least is that we are not in this stage anymore. We are well beyond this, and I think a majority of you guys understand that, and you're probably seeing that. But if you're new into the game, it's probably somewhere in this final zone here, which gives you around that sort of 40, 50-ish weeks to go. But I would just err on the side of caution in case it comes earlier than that. At least take some of those profits to the upside so you're not left holding the bags, or basically you don't go home with a gift bag. That's the worst thing. If you do all this work, put all this time in, and you leave the space without taking home a gift bag, well, then what was the point? Hopefully you learned something. We are now into the easier times to be trading. Those times were the more difficult times. The last 2 years, more difficult because the trends weren't as clear, whereas now they're becoming a lot more clear. More people are coming in. This is the easier time to be making those gains. The difficulty after this period, whether it's in the next 3 months, 6 months, 12 months, is knowing when the trends change and going from easy longs into maybe easier shorts, or essentially just a basically dead grinding market, which is much more difficult to trade. So if you aren't prepared for that, it can be a little bit daunting. Hopefully you've got on board with, say, TI Premium, or you're looking to trade. If you want to learn more about that, go and check out the link here in the top of the video description, ticrypto.com/subscribe, and you can use these skills across any markets, stock markets, crypto markets, anything with a chart, and hopefully be making some significant gains like our traders here are doing all sorts of things in the markets on all different cryptos, including the likes of XRP, smashing the gains here. So although I might talk down upon certain communities, it's all about just trading the game, whether you're doing longs or shorts. So congratulations, good work to you guys who are trading, making the gains there. And as I said, if you do want to learn more about it, link is in the video description. You'll see all of the free stuff in Discord, plus get the free weekly report. So that takes us across to XRP. And XRP has been on the way down. Sui also going off right now, $4. It seems like we're getting that rotation now from the Dino coins potentially into the stuff that was pumping before. And you can see this just continue to circulate. XRP is on its second day down. So if you guys remember, beware of that 3 days down. If you do get another day down, yes, maybe you'll see it climb back up, but just watch for where that close comes in. Is it going to be a push higher or close back under those tops? Still several days away, but just be aware of it. I'm not saying the whole show is over, especially I know it's XRP, but it could be time to load up again once you've waited for the rotations into different coins and that time catches up. So that was XRP versus Bitcoin. For the XRP USD chart, we're just at 1 day down. So if we're looking at the support levels to come in, watch the swing tops. There have been no breakdowns yet, so it's still in an uptrend, but you had a pretty significant move to the upside. To the downside, 50% is at around $1.70. Could be a reasonable area for it to reload. And like we looked at in yesterday's video, XRP has this pattern of just pushing up pretty fast and then retracing a lot of the move. Doesn't mean the game is over. It's just enough time for people to get sick of it. Maybe I'll come out and talk shit about it again, and that could be a good time to load up again until you see further upside within this cycle. And what's working in favor of XRP at the moment is the timing of the cycle. We looked at these timeframes, roughly 12 months in a move, right? The lows to the peak, roughly 12 months, and then a long time down. And it's done that multiple times. Even when the SEC came after them, it still had an uptrend through that period. You can see in 2020, low to the high, 13 months. Then there was basically 2 months of straight up. I can get rid of that. And again, you had about 2.5 months to that next peak. Now, 2022 to the first top in 2023, again, 13 months. So if you're just looking out roughly 12 to 13 months, just look for somewhere around July or August, Q3 that is, of 2025 for maybe an exhaustion of the entire move. Just keep it on your chart, and if it continues to go on forever, great. You're going to be an absolute multi-quadrillionaire, and you can tell Bitcoiners to eat shit and all that sort of stuff. But just keep it on the chart because it's basically done that every single time throughout its entire life. As for ADA right now, it's attempting to push a little higher. The 50% level to the downside is at 82 cents, and the swings have not broken down. So it's still in a pretty significant uptrend at the moment. You can see where each of these lows have formed, and you got a nice clean uptrend. That's the swing indicator type of trading. Breakouts from the highs, and then you can keep raising your stops up to the next level. Just keep moving them up, and you're basically able to lock in a whole lot of profit in the middle of the move. That's the whole idea here. You're not trying to pick the exact bottom. I don't know anyone that has an indicator that picks every single low and gets out at every single top. If they do, tell them they're lying, because even the best traders and hedge fund managers in the world don't have that. Even with their billions of dollars they invest into all of their trading and their research, they still don't do it. So that sort of stuff is absolutely telling you shit. Just take moves out of the middle, and you'll be here to fight another day with your profits. We started the video at 100,000. Bitcoin's now at 104,000. Let me know in the comments section what price Bitcoin is at when you are watching this video right now. We're up 572%. Plenty more coming at you. Hit the like, subscribe to the channel if you haven't already, and links in the video description for TIA Premium, TIA Crypto, and of course, the crypto exchanges. Thanks again, guys. I'll see you at the next one. Congratulations. We all made it. Now, what is the next target? Till next one, take care and peace out.